Good morning, everybody. Welcome to today's morning blast with myself and I don't know what superlative to use today, to be quite frank, but Mr. Michael Brown. It is Thursday, the 3rd of April. Sorry, someone appears to be going past my house on a lawnmower. It is obviously post-tariff day. Post-Liberation Day, so plenty to talk about. But before we crack on, because I think there could be some expletives involved, so I better get the legals out the way today more than any other day. So as usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed the hosts, which is myself, Mr. Ryan Paisley, and of course, Mr. Sweary Michael Brown. Mr. Michael Brown, first, I've got one question for you, if I may. Did you wake up to listen to von der Leyen?
Morning. No, I didn't. I did not. I woke up, actually, ironically, just as she finished speaking. But given that she said nothing of particular interest, I'm not overly bothered about
Genuinely shocked. Genuinely
that.
shocked.
Since when has an EU speech ever been worth listening to?
Well, no, I didn't think it would be. That's why I had no interest at all. But I know what I'd rather boil my own head than listen to it. But I thought, what a dedicated man to markets you are.
There are limits to my dedication, and 4 a.m. is pushing it.
Yeah, fair enough, fair enough. I've got to say, just a quick shout out. We do hit on Zach quite a bit. Beat on Zach quite a bit, but he's
what you get up to in your own time, mate, is your problem.
The mask has slipped. The mask has slipped. But no, he smashed it out of the park today with the overnight news roundup. Fair play to the boy, considering he's on the slopes as well. Absolutely the best, most concise list of trade related headlines you will see on the internet, all your money back. So do check it out. It's obviously tweeted. It's part of the PIQ Presents pin tweet and obviously on our Substack. And if you're not on our Substack, you're a fucking moron anyway. But yeah, carry on.
Yes, he has done well, hasn't he, the lad? He can give himself a
Also,
little
I got to say,
pat on the
I think
back.
you must be. I think you're quoted in there about a dozen times.
I know, that's why I'm giving him praise this morning.
Yeah, I did think that. I did think that.
Anyway, shall we crack on?
Yeah, I think there's a couple of things to talk about.
Yeah, there are a few things to talk about this morning. Of course, good morning, everybody. A very long day yesterday on Liberation Day as we waited for the announcement of reciprocal tariffs from President Trump, which came in a very long and very rambling press conference in the White House Rose Garden just after 9 o'clock yesterday evening, London
Just
time.
on this. Just on this because it did tickle me. Sorry, I promise I won't interrupt very much today. But what's with him and the word groceries?
I have no idea. I
Did you see that?
genuinely have no idea. I mean,
I was
also,
like,
what's with the hillbilly in the high vis jacket that he brought up on stage for 5 minutes?
look,
Who's that geezer?
whoa. You know my background. I'm gonna have nothing said against yokels or hillbillies. But no, but like if you were playing a drinking game with your mates and you picked out groceries at the start, you'd think, oh, I'm on the sodas all night. But fuck, you'd have been hammered. But anyway, sorry,
Bizarre.
carry on.
Yeah, so a very long and rambling address from President Trump last night. I think there's probably three key things to pull out from what he was saying, and also from the various other bits and bobs that the White House released in the aftermath of Trump's address. So, of course, all focus on reciprocal tariffs. The first thing is who is being slapped with a reciprocal tariff, and the answer is every single country in the world, apart from Canada and Mexico for the time being. I say every single country in the world, and I literally mean every country. The US has even levied reciprocal tariffs on small Pacific islands where the only population is seabirds and no humans actually live. That is how far reaching they have gone with this policy. The next question
that shows the dedication and the attention to detail that I appreciate.
The next question is, what are the levies that have been imposed? And effectively, the reciprocal tariffs or the tariffs that have been announced come in two parts. So the United States have imposed a baseline tariff, this is their terminology, not mine, of 10% on all imports into the country from anywhere in the world. On top of that 10%, there is an additional reciprocal levy, which Trump says, and I'll get onto this momentarily, is equivalent to half. So this is how he's claiming this is fair. This reciprocal levy is equivalent to half of the tariff and non-tariff barriers that the country in question charges the United States. So to run through some of those levies, for the European Union, the total tariff that they will now be charged is 20%. For Japan, it's 24%. For India, it's 26%. Here in the UK, it's 10%, because that is obviously the baseline that anyone is being charged. So we got off a little bit lightly. For China,
Yes.
indeed, for China, the reciprocal levy that was announced last night is 34%. But the 20% that Trump announced a couple of months ago, which feels like it was about a couple of decades ago, that is still in place. So it's 34% plus 20% on top. We've also seen really chunky rates on some of the other Southeast Asia countries, Vietnam at 46%, for example. And I think this is really going to sting, because what a lot of companies have done is move manufacturing from China to places like Vietnam,
especially.
Cambodia, etc., basically to go, well, you don't like China, but we still want the cheap labor. Well, now they're stuffed, basically, to cut a long story short. The third point is when these tariffs will go into effect. Now, the baseline 10%, that comes into effect on the 5th of April, and the reciprocal tariff that goes on top of that, that comes into effect on the 9th of April. So I think this is probably right at the punchy, hawkish end of what market participants were expecting, because you've got pretty much a universal tariff, because Canada and Mexico are still subject to these levies that are supposedly to do with fentanyl and immigration. You've got tariffs that are much higher than participants expected. JP Morgan saying that this is going to put let me just get the exact figure. JP Morgan saying that this puts the average US tariff rate at around 23% now. That compares to about 10% before Trump spoke yesterday. And you also have these tariffs going into effect as near as makes no difference straight away, which means there's very, very little time to negotiate and stop them being implemented. It's very much a case of they're going to happen, and then you've just got to try and wriggle your way out of it. Now, one thing I do want to stress, and this has only come to light overnight, and I mentioned earlier that the US have worked out this reciprocal levy as half of what countries charge them. There is no economic logic in the calculation they have used whatsoever.
It looks nice, though.
It looks very nice on a scatter chart, and I'm sure Howard Lutnick is very pleased with himself. But what
quickly before we go into this, because this is going to be one of those get comfy and try and
it
keep
is
up with
actually
how they worked this out. But did you see Bezant last night?
Yes, I don't think he knew. I don't think he was in the room very much.
No, it was very much. I think what was the question? Is like, are these like the tariffs on top of other tariffs?
And he said, "I think so."
Yeah, and he went, and I'm doing air quotes now, everyone. Obviously, I don't know why I keep doing this, because no fucker can see me, but I'm doing air quotes. Yes, I think so.
Yeah.
You're the one person that should really know if these tariffs were on top of other tariffs.
Doesn't instill confidence, does it?
No, not particularly, no. But anyway, sorry, right, everyone get comfy, and also I'll find the equation and pin that up as well.
Yes, you go and do that. So basically what the United States have done, and Howard Lutnick and various other trade people in the United States government, is they have looked at all of the trade deficits around the world. So they've taken, to work out this reciprocal levy, what they've done is they've taken a nation's trade deficit with the United States, and then they have divided that trade deficit by the goods exports that country sends to the United States. And then they've halved that number and gone, okay, that's the tariff you can have. There is no economic logic or reason or sense or coherence behind that whatsoever, to be completely honest with you. It also means that if, and I'm kind of speculating a little bit here, but if Trump is looking for, or if countries are looking for an exit from these tariffs, effectively, the only way you can do it is actually to reduce your trade deficit with the US, which then mechanically makes that number lower. It doesn't seem as if, changing tariff policies is actually going to change Trump's mind very much. So, I mean, it's fucking insane, to be completely honest with you, to make trade policy based on that. And if that is indeed what has happened, because this hasn't been confirmed by the government. This is just people backing out the numbers and trying to work out how they've got to them. It seems that is the calculation they've made. And if it is, it's just clear that no one in the US administration actually understands how global trade works, because that is clearly not how it works. And saying that accounts for all tariff and non-tariff barriers is just complete tripe, to be honest with you.
Yeah, no, nothing more
Um,
to add. I'm just sitting back, just basking in the glow that I've created a sweary monster.
You really have. Where to next? I guess we should just have a mention briefly in terms of responses to those announcements from Trump last night, and then we'll get on to how markets have taken
And
all
and
of
it must
that.
be said that the responses are still coming, so make sure you stay glued to the PIQ Twitter feed. God
Yes,
bless my boys out
absolutely.
in Nepal, because I think I might have to give them a bit of a pay rise over this juice than the past 24 hours and the next probably 2 months.
Yeah, this is by no means a sort of comprehensive list. This is subject to
Yeah.
change, literally as I'm speaking. Obviously, we heard from Ursula von der Leyen in the European Union this morning saying that the EU are prepared to respond to US tariffs. They are preparing further countermeasures, and that they will convene some what she was calling some strategic dialogues. So that's basically an EU summit, presumably. Bloomberg sources reported yesterday that European leaders were potentially planning some emergency fiscal stimulus as well, although von der Leyen didn't seem to mention that in her remarks overnight. From China, naturally, they've said they strongly oppose the US tariff measures that have been imposed, and that they will resolutely take countermeasures to safeguard their interests. Again, via Bloomberg sources reporting before Trump's announcement yesterday, there were some news wires reporting that China are reportedly said to be restricting companies from making investments in the United States. So that is certainly one to keep an eye on. Japan, in true diplomatic fashion, have called Trump's announcement extremely regrettable, and they are going to ask the United States kindly to exempt them from tariff measures. I think Trump's response to that will be 2 words, and one will start with F and the other will start with O. Here in the UK, Jonathan.
Fair enough.
Yes, that's exactly what I'm thinking. Here in the UK, Jonathan Reynolds, the business secretary, has said that a 10% tariff is a relatively good result, and that he will ignore what he called siren calls for retaliatory tariffs to be imposed. As we expected, the government just kind of sitting back and taking whatever Trump throws at them in the hope that we get a trade deal done in relatively short order. Canada, they're going to retaliate. Mexico, they are not going to retaliate. Scheinbaum saying that she will not impose tit for tat tariffs in response to Trump's announcement. In terms of the market reaction, very risk off, which is as expected, given that the tariff announcement we saw was towards the punchier end of expectations. The S&P future fell around about 2% during Trump's press conference yesterday. We're down another 3% in early trade this morning. The Nasdaq 100 fell about 2.5% late yesterday, and we're trading down by about 3.5% this morning. Naturally, on the back of that, you see European futures take a bit of a leg lower as well. Treasuries rallying across the curve. Gold traded to a record high overnight. And in the foreign exchange space, we've seen very, very significant dollar weakness indeed, with the dollar index trading down to a low of around 102.5. We were trading around 104.5 a couple of days ago. In turn, that's pushed the euro to 6-month highs at 109.90. We've seen cable trade north of the 131 mark, and dollar yen testing 147 to the downside. I think the FX market very clearly saying that actually the net effect of tariffs is Trump's probably going to harm the US economy more than we see other economies around the world harmed. But I think in terms of a sort of broader take, and this I've sort of got 5 points here that I just want to run through very, very quickly. This is not only my view, but also kind of a consensus just from chatting to a few market participants this morning. I think the first thing to say is that yes, we are risk off, but I would argue that the risk aversion we've seen probably isn't as severe as you might have expected. I was genuinely surprised to wake up this morning with the S&P down 2.5%. I was thinking we were going to be probably double that, if not more, given the severity of the announcement that we saw from Trump yesterday.
I'll tell you the moment when I finally got my head down was about the time when everyone was screaming out for S&P circuit breakers, and
Oh
that's when I
God.
thought, do you know what? That's when I woke up. That's when I woke. That's when I went to sleep, going, do you know what? I bet we wake up higher than where I go to sleep, and that's exactly what's happened.
Yes, indeed. So yeah, I think there is also a bit of a general vibe that there is probably worse to come. Of course, the other thing to remember is we are sat here at 8:45 London time, 3:45 in the morning in the United States. US participants haven't actually woken up and come to
Yeah.
enter the fray just yet. Secondly, I would say that in terms of a sort of how markets are reading this, focus right now seems to be firmly on the downside US growth and recession risks that these tariffs introduce, as opposed to the potential upside price pressures that these tariffs have introduced. And we see that if you look at how money market pricing has shifted this morning. In the United States, the OIS curve now discounting around 80 basis points of easing by the end of the year, up from about 75 yesterday, and a similar dovish move in pricing in terms of BOE and ECB rate expectations as well. Thirdly, and again, pat on the back to us and to the guys at Alpha Pix and Helen Thomas at Blonde Money and Angie Setzer and everyone else who's been speaking with you recently, Ryan. Yesterday was not a clearing event whatsoever.
No,
It's not a case
no,
of
no,
we've
no,
all
no, no.
woken up this morning and gone, great, case closed on tariffs, let's move on. Yesterday has actually just served to increase uncertainty on the trade front even
And
more
even,
and to even
and
higher
even more
levels
than
than it
that,
already was.
yesterday me and you even went as far to say that we'll probably see headlines from other nations, leaders of other nations, whilst he's still talking,
And
and
we
that's
did.
exactly what we saw.
We did indeed.
There you go.
So that's
Can't trade for toffee, but we can tell you what's going to happen.
yeah. Someone else has to do the trading. We just give you the ideas, not advice, of course.
Not advice.
The fourth point I would make, just to wrap this little sort of diatribe up, for want of a better word, the dollar is not acting as a haven whatsoever. It hasn't
Yeah,
acted as a
no.
haven for a little bit of time now. And I think the reason for that is you've got to consider how market participants are acting. Everyone's come to their desk this morning and gone, holy shit, that's serious, out of the United States. How do I mitigate that risk? How do I hedge against the trade and political and tariff uncertainty out of the States? Well, buying the asset that is most exposed to that uncertainty and the downside risks it presents is not the way you hedge that, which is why the dollar has traded so much softer this morning. And last but by no means least, I think it's going to take some time for the dust to settle on all of this. Retaliatory rhetoric and measures are still coming out even as we speak. There's also the issue of pharma tariffs, lumber tariffs, chip tariffs that may well still be announced. We would assume they will be, but we don't know. I think it's going to take quite some time for the full implications of this to become clearer. But I think as the full implications of this become clearer, I would argue that focus will end up pivoting a little bit more towards the potential inflationary implications of the announcements that we saw yesterday, which in turn is likely to leave the Fed on the sidelines for longer than we previously been expected. And already this morning we've seen Morgan Stanley, they have scrapped their call for a March Fed, for a May. Let me start that again. Morgan Stanley have scrapped their call for a June Fed rate cut, and they now see the Fed on hold all the way until March of 2026. Their argument is basically, yes, growth is going to slow, but with inflation at 4 rather than nearer 2, the Fed won't have the room to deliver any easing. And I wonder whether more institutions on the sell side are going to come round to that point of view. I think that's probably it in terms of trade, although there's every chance that things have changed while I've been speaking. So,
well, this is what I was going to. That's great timing, because I was going to say that, as we've seen before, mainly probably the last time it was like this where we were given this warning was during the election or over the election night. Bear in mind that, especially if you're listening to this on replay,
oh
which we
yeah,
know most of you do, there's every chance what we're saying now is out of date. It is an extremely fluid time, and I'm not just saying this, but make sure you're glued to, like, if you have got risk out there, make sure you are sticking to PRQ's Twitter feed. Obviously, we well, not me, but our team are posting all the headlines as they land on the relevant terminals. And also, if you are in front of your desk or even on your phone, do check out PIQ's platform and set that up. And you can customize it to follow all the tariff stuff and really kind of get the most out of it. And also, there's loads of free trials knocking around as well. So I'm sure you'll find one of those. But anyway,
The
thank you very much, Michael.
sorry,
Go
I
on,
was the
sorry.
very, very last
That's
thing
right.
I'll say on this is,
Yeah.
as you say, if you are listening to this back, then just ignore everything we've just said, basically. But
Yeah. Tell us what's happening.
because the situation is changing so quickly, market participants across the board will either go, I'm just going to get flat and get out,
Yeah.
or they're going to massively reduce position size and massively
Yeah.
reduce the time that they hold those positions for. The net
Yeah.
effect of all those three things, forgetting all of the news flow that we've got coming in as well, is to create an incredibly choppy and
Yes.
bumpy and actually quite illiquid market. And
Yeah.
that goes for all asset classes. Doesn't matter whether you're
Yeah.
trading FX, equity, whatever, it's going to be a mess.
Yeah. And do you know what? The bizarre thing is, up until yesterday, up until yesterday morning, you could argue that one of the most like ignoring the tariff situation, which is hard to do, I admit, but possibly one of the biggest, most important non-farm payrolls we've had in quite a while, because it's one of the first true ones
Mm.
under Trump's leadership and everything he's doing with the Doge cuts and stuff. And we've not on the show so far, we've not even mentioned non-farm payroll.
No,
So you've got that in the mix as well. It's just not conducive to having any risk on the table unless you're mandated to do so.
no, and of course, not only NFP but also Powell is speaking tomorrow as well. Now, I can't imagine he's going to want to make waves with his
Oh
remarks,
God, yeah,
but again, it's just another risk on the horizon. And
yeah,
if you're running any sort of discretionary book, you're just going to go, fuck this, I'm out for the week.
yeah. Well, this exactly that. I was thinking exactly that. If you're not flat already, if you've not had the tap on the shoulder already, yeah, flatten up, get down the pub, come back Monday and see what's happening.
Exactly.
But anyway,
I'll
so
shut
some
up now
headlines from Zach, as I
momentarily.
said. Yeah, sorry. As I said before, if you are going to read or subscribe to your first overnight news roundup that Zach puts out, definitely make it this one. There's so much information you need to be reading on that one, and he's done a great job. Pats Zach on the head virtually. So starting off, obviously, just we've covered the arse out of tariffs. I won't go too much into it. Just but a couple of key ones for you: 20% on EU, 24% on Japan, 25% on South Korea, 26% on India, 32% on Taiwan, 36% on Thailand, and as Michael said, 46% on Vietnam, which is going to kick in the balls for a lot of people that have moved out of China. And China, of course, is hit with the cumulative tariff of 54%, which is 34% plus the 20% tariff, fentanyl tariff, plus duty-free de minimis exemption for Hong Kong and China, which is ending. So a massive blow for people like Shane and Timu. Other points, just quickly, because I know Michael has covered this roundabout. Mexico and Canada obviously already facing the previous tariffs, though the USMCA compliant goods stay exempt indefinitely. Exclusions, existing 25 tariffs remain on autos, parts, steel and aluminium, copper, lumber, semiconductors, pharmaceuticals. An annex listing further exemptions is forthcoming, so expect another giant piece of cardboard with those scrawled across it. Uh, White House claims that the rates match the formula of trade imbalance divided by total imports. We've put the glorious equation up on these spaces. Treasury Secretary Bezant urges no retaliation while China and the EU vow countermeasures. Just looking at market reaction economic outlook, Fed's Kugler warns these tariffs could extend or intensify inflation. No shit, Sherlock. JP Morgan
Thank
sees
God
an
she didn't do
average
what
US
Zach
tariff of
suggested she did.
Oh, no, exactly that. JP Morgan sees an average US tariff of 23%, raising PCE inflation by up to 1.5% and pushing near recession. Piper Sandler sees a 2.6% jump in inflation, forecasting a Q2 downturn. UBS suggests inflation could climb to 5% if all measures stick. Political pushback. Everyone loves a good pushback story. Some GOP senators joined Democrats in a symbolic resolution to kill the 25% Canadian tariff, but Trump can veto it anyway. Morgan Stanley scrapped their June Fed cut call, citing tariff induced inflation. The White House hopes, I believe, Michael, forgive me if I'm wrong, Morgan Stanley also pushed out cuts to next year.
They
Is that
did,
right?
yeah. They reckon the Fed are on hold until next March now.
Oh God, it's almost like I read your tweets. The White House's hope
Where do you think
is
Zach
these
gets his
moves will
info from?
generate. Yeah, the White House hopes that these moves will generate 400 to 600 billion in annual revenue, though critics dispute the maths. There we go with the other 600 billion. They love a big number with a six in it. I'm not sure why. International response. Major global partners. China called for immediate cancellation, calling the US a major beneficiary of global trade. They promised countermeasures to safeguard interests. Von der Leyen warns the 20% tariff is a major blow. The bloc is ready to respond. The Council President Costa wants more deals with other partners. Canada's PM Carney says Canada will respond with new countermeasures on steel and aluminium. Details are forthcoming today. PM Shiba from Japan calls it extremely unfortunate and pledges direct appeals to Trump. South Korea, the acting president Han Duck-soo aims to negotiate or protect
Sorry.
vital industries. So, stop it. Stock market is down 2.7 as we went to print. Vietnam slammed with a 46% tariff, as we mentioned before. The PM calls it unfair, sets up a task force. Task force solve everything. Thailand, obviously, as we mentioned before, 36% tariff. Their PM, Shinawatra, I only know that through cricket, bizarrely, because there's a cricketer called that, says they'll negotiate to protect GDP. Further macro news. Beyond the tariff turmoil, thankfully, Senate Republicans advanced a 5 trillion with a T tax cut framework over 10 years. Trump's approval rating slips to 43% per Reuters Ipsos poll due to concerns about tariffs and transparency on recent military actions. Money markets raise bets on global rate cuts, suspecting slower growth overshadowing inflation spikes. So Morgan Stanley being the outlier there, for the US at least. China's services PMI expanded in March. The yuan midpoint is at a multi-month low. Japan saw foreigners offload local stocks for a ninth straight week. Some geopolitical headlines. On the geopolitical front, we've got Europe's defence. Diplomats and defence chiefs meet to bolster capabilities in light of a God, forget a capricious. Oh, I can't even pronounce that word. US, basically naughty US and an assertive Russia. I'm not very good with long words, people. We know this. I'm a little bumpkin from the countryside.
Come on, Zach, sort
Anything
it
more than
out.
a couple of syllables, I struggle. A top ally of Germany's incoming chancellor warns that the public underestimates Russia's threat. In the Middle East, the US defends ongoing warplane and naval deployments to deter Iran, though no imminent conflict is seen. And just to wrap up with some market and corporate news, Apple sees a 9% gross margin hit if it can't pass on tariffs from China. Amazon to launch Project Kuiper satellites this month, challenging Starlink's broadband dominance. Micron is set to mass produce the HBM3E after nailing NVIDIA tests.
Oh, good. I've
Ah,
been
mate,
waiting
so
for
I'm
that.
just glad that's not like some element equation that I read out yesterday. H2O, what's that?
No, it's how they worked out tariffs.
Yeah. Rolls-Royce seeks government support for a $3 billion next-gen aircraft engine. Volkswagen to add an import fee on tariff-affected cars. Siemens is buying US-based Dotmatics for 5.1 billion, bolstering life sciences. TSMC might start 2 nanometer production in Taiwan by the year end, chasing a $1 trillion number in West with a T in quarterly sales. And finally, for me, Samsung looks to Chinese tech to shore up its semiconductor division and amid shortfalls in US orders. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms of today, then, you really probably don't need me to say that all eyes will remain on the trade and tariff front, with fallout from Trump's Liberation Day announcements set to continue. Market participants will focus not only on the retaliation and the responses from other countries around the globe, but also any further rhetoric that we get from the White House or the Trump administration. On that front, not entirely sure whether we will actually hear from Trump today. He is due to be flying down to Miami for a golf tournament. No, I'm not making that up. But nevertheless,
Sorry,
we
I gotta
are,
say,
of course,
I do like this though. He's literally just dropped
it's a fucking strong
he's just
move, isn't
dropped a
it? Blow up
massive
the global
pile.
economy and then go and
Yeah, he's
play
just
golf.
dropped a massive sack of shit on global economy. He's like, right, fuck you lot. I'm off to tee off.
Yeah, I mean, fair play.
Yeah, I mean, if I could play golf, I would.
Yeah, same here. We are, though, due to hear from the Commerce Secretary, Howard Lutnick. Trump isn't in DC, so he can't be bootlicking today. He is instead going to be touring the TV studios. He's going to be on CNBC at 1 o'clock this afternoon, London
Babe
time,
Station.
and then he'll be on Bloomberg. Oh, God. And then he'll be on Bloomberg TV at 1:30 London time. Of course, Lutnick is. A feisty character, shall we say? So it'll be interesting to see whether he sort of doubles down on what Trump was saying yesterday, or whether he tries to recover things a little bit. I would be firmly in the former camp at this moment in time. Away from trade, we do have quite a busy data docket today, but to be honest with you, I don't think any of it is going to matter one jot. As I've been speaking, we've had the final read on services PMIs out of the Eurozone, with the index revised up to 51 from a flash estimate of 50.4. At 9:30, we also have final services PMI figures out of the UK. That index expected unrevised at 53.2. Through the rest of the day, we get PPI from Europe at 10. We get minutes from the March ECB meeting at 12:30. And then across to the United States at 1:30 this afternoon, we have the initial jobless claims data. Initial claims expected 226 from a prior 224. Continuing claims 1.87 from a prior 1.856. Neither of those pertain to the non-farm payrolls survey week, though. And of course, that March payrolls print is due tomorrow. And then at 3, we have the latest ISM services PMI data out of the States. That index expected 52.9 from a prior 53.5. There's also a few Fed and ECB speakers on the docket as well. To be honest with you, none of that matters. It's all eyes on trade, and I don't think anyone is going to have any conviction whatsoever to be doing anything other than just de-risking and degrossing as we move through the next, well, I was going to say day, but really 2 days into the weekend.
Get down the pub. It's a lovely day. Well, here's here. It's a lovely day. Yeah, I might be about this evening. Is in fact, Mr. Michael Brown, if you're around. I know you see me tomorrow, but if you fancy doubling up on a bit of Paisley,
twice in 2 days, bloody hell.
But also, just a quick shout out.
I mean, I need a beer. I'm desperate.
Yeah, this is it, right? Anyone will do. Hang on, I'm just slagging myself off. What am I doing? Fucking hell. But just whilst we're on that, listeners, obviously, especially the London crowd, on tomorrow, we're doing our second non-farm pints. We're going to be up in Old Street. If you need to know where we are, it was Gibney's, but it's on Twitter and all that stuff. So definitely come and join us. We had a good laugh last month. And, there's lots to rant about over a few beers. So definitely come and join us. But Mr. Michael Brown, thank you so much for today. I think it's, we've covered a hell of a lot in our usual time, which is how we've shoehorned that in. I'm not quite sure. But listeners, thank you so much for tuning in. We really appreciate you, especially our regular ones. Again, if you are playing this back in probably 10 minutes time, ignore half of what we said because it's probably out of date. But regardless, if you are trading today, 1, give your head a wobble. 2, keep it tight and stay safe. And 3, we'll see you tomorrow.
Bye for now.